Good afternoon, everyone, or good morning. Can you hear me okay? Great. Just to let you know on what I'm seeing, usually markets after a big old washout have at least one test of the lows. We got barely there. That's about it. So, what are we doing now? Well, the first thing is that we came in long bonds. I posted that on two different sites. And let me show you why, because I'm not sure it's done, but this is why. Now, don't get me wrong. We have a lousy trade, but we're bigger in TLT, which I showed. The whole idea is this, that you had TLT go down and down and down every day. And then you get that washout, that whoosh. That to me is an exhaustion gap. Luckily, I posted that on also on social media about the whoosh. Now, you might say, well, what do you mean about the whoosh? Well, not only did you have that massive gap down, but you also had a huge amount of volume. That's another sign of it. So now, don't get me wrong. Where would you get out if you're long it? Because we bought some calls. Let's just leave it that way. We bought some calls. The resistance now, there's massive resistance at 92 and a half. I mean, that's maybe pushing it. And, round two, I'm looking to get out in a number of rooms. So just to let you know, at least that's what I'm trying to do. When it comes to everything else, like I said, there's usually after a big old sell off, you usually have a test of it. The NASDAQ didn't do it. So a lot of things still don't look great. And I'll show you the difference in here between the two. So here's the TLT on the left. I'm showing you the volume. It gets a little distracting if I have up the futures. Not the future. I don't know the future. Well, yeah, I do. I just, that's why I'm on. No, I'm joking. So the way I look at it, that's your volume capitulation. On the other hand, look at the QQQ. Now, it might not be today, but look at the volume today. It's early. It's not even noon, but look at the volume yesterday versus volume a lot of other days. So it's hard to show the scale there, but you see what's going on. Yeah, it's not a capitulation. On the other hand, if you take this off, you'll see there's a certain time to go in and go crazy on the short side. And there's certain times when things are oversold and you just back away. So you don't have to do a thing, but you got to back away. Now, what am I talking about? I'm talking about the MACD on the bottom. Now, oversold, and the way I determine a downtrend is oversold in a downtrend. That's not as reliable as overbought in a downtrend. So yesterday we were shorting here. Well, I alerted about it, and I wanted to show you on how we use the MACD. So number one, you see the oversold. And you see that oversold. But I want to show you on at least day trading wise how I do it and how I'm trying to teach it. So here's the ES. Like I said, oversold in an uptrend, in a downtrend. That's not to be trusted. And plus, on the right, check out that hourly chart. If you think I'm buying in here, so you see it's overbought on an hourly, oversold on a daily. Gets a little rough. But this is how I'm looking at it. FDX, I didn't take the sale, unfortunately. If you did, great. But TLT, I'm still in. So yeah, I wasn't fast enough in FDX in there. So nice job. Great job. Yep. So this is how I'm looking at it. Number one, I wanted to show you on overbought in a downtrend and how to initiate it. So we're going to go to yesterday, that arrow right there. I'm going to take off everything else, the drawings. And then I'll show you that arrow again. Now, a lot of people ask, it's a great question. How do you know it's overbought? Well, I'm not trying to be glib about this or a Weisenheimer. You don't know because it was overbought here and overbought here. When do you see it go down? Well, when it's overbought under that ATR trailing stop, and a lot of times I use colors for this. So if it's under the ATR trailing stop, it's red, over it, it's green. So that way, if I have up a ton of charts like that, I can watch them all as a group. But the way I'm looking at it is when I see it overbought, and this is for the day traders. This isn't, I'm not talking about swing traders. So when this is overbought and the thing that made the markets go down is on its lows, you got to include the stimuli. So I'm taking the stimuli. So on a 15-minute chart, the bond market, that's what made it go down yesterday, right here. So you got overbought in a downtrend. I hope you can see that. Downtrend determined by the ATR trailing stop. You can use a 50 moving average even on a 15. That's fine. The whole key is to determine if it's an uptrend or downtrend. The second thing is to determine why it's down. And the biggest reason it was down is because of the bond market. So if you take the bond market yesterday right here. So in that same thing, 130. So where was the bond market at 130? The bond market was right here. So it didn't really rally much. That's all of 4 ticks right here. I'm going to take off these drawings so you could get a better feel. So we determined that the bond market was the reason the stock market went down. And if the bond market wasn't really rallying, then you didn't really expect the stock market to rally much. So just keep that in mind. That totally doesn't mean that you short just because it's overbought. Like I said, the thing that made it go down was the bond market. It didn't really rally, and you're overbought on a downtrend. So what you're doing then is you go to a shorter term chart and you look for the reversal patterns. So all you're doing is looking for the reversal patterns. So I'm going to go and link this. So what's a reversal pattern? Well, you can use this trusty ATR trailing stop again. So if you go back to yesterday and you go back to that 130, there. So yeah, that arrow, it looks like I had mimosas for lunch yesterday. That's pretty funky arrow. But the arrow is showing when it started to turn. So on the left, you were overbought right here. So that's at about 3:30. That's a 15-minute. So then you go to a 2-minute to look for when it crosses the ATR trailing stop. So that way you're looking for the reversal candle. So that's how I determine on a 2-minute. Now you might say, I thought you used the 1-minute. On a crazy day, I'll use the 2-minute because you'll get whipsawed too much. So you'll just get faked out on a 1-minute. So right here is where you short it. Right when it crosses that. Right there. So now you might say, yeah, but I missed the first 6 points. Yeah, but guess what? That's a 35-point move. So you made the next, and where would you get out? Well, that's another thing. So this is how I try to structure this. I don't use that 9. I use a 20. And I'll show you why. It can be exponential or simple. So I'm going to make this nice and big so you could get an idea in here. So the idea in here is we shorted here. Now, if it goes down too fast, then the average true range widens, or the average true range stop. So the average true range stop gets too far away. Now, in this case, it just rode all the way down because it wasn't a bloop like you saw in the TLT. So this went all the way down. Where would you get out? Well, you're getting at the end of the day. So, and that's another thing. If I see near the end of the day and I see it really get too far away, I'll usually just buy it back. So you're talking about if you got out right here. So you just got out near the end of the day, that's 25 points. So that's where the MACD comes in beautifully, beautifully. So I just wanted to show you that and it worked. So now contrast that to in here today. So you got the ES right now, and we're going to put up a 15-minute chart. So what's the thing that made the ES go down yesterday, the bond market? Well, I'm going to restore the cells and show you. So on the left, we're going to have the bond market. So the thing that made the markets go down yesterday was the bond market, and now it's gone up. So the second thing, and this was shown on our chart patterns mastery, I call this a Stewie pattern. That's an inverse head and shoulders. With, if you highlight it, well, you might be, that's creative, but it looks like Stewie. So you're just taking that inverse head and shoulders and then looking for that. Now, another way to do it is take a teeny rectangle. All you're doing is trying to get the direction right. As you see, it got over the ATR trailing stop. Yeah, that's been real handy, especially if you use the colors I showed you. I mean, that it's proprietary, but you get on Chart Patterns Mastery or Essentials, you'll get it. So that's for the YouTube channel. In fact, I can put it up there for you. I can't put it on YouTube. So just to let you know, can't put it on the YouTube, but I can share it in here. So let me share it. This will be up in the on the bottom for you. There's that. That's a color ATR trailing stop. That's a proprietary thing there. So that's the link for it in the essentials room. And we have that in the, we already have it in a chart patterns mastery. So what happened today? Number one, the bonds went up. In fact, they're getting near resistance. Yeah, I got to take a profit. If you're in here, I'm going to sell half. So let me just show you what I'm doing. I got to post that in a different room. Give me 1 second. Just have a responsibility here to show it. There. So the whole key in here is what made the markets go up today. Well, the bonds helped, but I still think there's a ton of damage. What happened? The bond market had a teeny little downtick and everything downtick. So that's one thing. But I'll get on how, at least on how I see it, is this. What overbought in a downtrend? You got it on the ES, especially on an hourly chart now. Yeah, believe it or not, now it's overbought in a downtrend. It's barely. But let me show you another thing about an art, not a science. And that's why I've been doing it a long time. And I hope it helps with how I interpret this. Usually, after a protracted down move on, let's say, hourly or 15, the first break of it creates an overbought condition. So usually the first break I don't trust. Just keep that in mind, and guess what? Yeah, maybe that's doing like, TLT and CB and forming some kinda inverse head and shoulders. The problem is it's against a bunch of people that got hooked right here, right there. So, but there's an hourly. So let's say you say it's overbought on an hourly. Well, then at the minimum, I go to a 15-minute. Well, the 15-minute hasn't shown you anything. How about a 2-minute or a 5-minute? 2-minute. Has that showed you anything? No. Still doesn't look bad. Yeah, the first downtick, everybody wants to get short. If we want to go on our interpretation, we want to at least find a chart pattern or take that ATR trailing stop. We're not there yet. So that's very interesting. I just thought I'd show you that. The other thing, all of these. Yeah, I'm telling you, Meta was 305. It's 302, even though the NASDAQ's on its high. So individual stocks, look at all that red now. So big deal to me to watch that closely, that they're not rallying like you would have thought they'd rally. Now, some of the chips are, but that's about it. In fact, give me a second. This was just sorry if that was late, but for chart patterns mastery. So a little late, but that right when it crossed. It's now, like I said, if you have a protracted up move, I'll show you. So you got a protracted up move. You got a fast move here. So because of that, the ATR trailing stop gets wider because the average true range is wider. So you got to use the blue line, the 20. So, like I said, though, when it first crosses, it usually is not to be trusted because it's going to create an oversold, too oversold on the MACD. It's the second one that matters. So, what happens on the second doesn't mean to go crazy on the short side, but it means that now you can draw a defined trend line just in case. So, I see so many people on internet trying to draw like a trend line using one point of contact. Oh, what do you have on the right? Oh, you're getting there, but you're not there yet. So, how about Meta, which, well, that had it right here. So, you had that protracted up move. You had the sell off. Yeah, you missed that, but you got that. So, pretty impressive, those two things. So, if that's doing that, more likely that a lot of the other ones will. So that's what I'm watching real carefully when it comes to Amazon, Google, and Apple. So you see what happens at Apple. So now that Meta is trying to go to its strike price, Google might, Amazon's trying, and Microsoft did. You might say, well, I love playing these strike price plays about going to 175. So spread traders usually have to unwind means it drifts toward that price. The problem with Apple is this, because the problem with Apple is this. So you're like, yeah, 175. What I look for is evenly dispersed open interest. So I want a lot of open interest on on the right and on the left. The problem is there's a lot at 177 and a half also. What would make me more confident that that'll go to 175? Well, the way Meta and Google and Amazon are acting, I'm a lot more confident. So just keep that in mind in there, a lot more confident. In fact, yeah, that's what I'm watching. So you see what I see. If Amazon is doing this and Meta's doing this and Google and Microsoft are doing this, Yeah, I'm looking at that the probability of this going down to that strike versus that one goes up. So if these were all on their high, I don't know about that. Now, Broadcom on the bottom right is up, and it's up for a good reason. It got nailed yesterday because Google was going to go to some other chips theoretically. Except now they're saying, yeah, it might be 2017. So not a big deal. So just keep that in mind. So that's where I am right now. Now I'm telling you, if this doesn't hold, you're watching what Amazon. I'm just going on relative to the rest of these. Now, I used to say it's all relative, and I kid about my wife's family in Alabama. They're fine. It's my relatives you got to worry about, doing the family tree stuff. So it's all relative, I guess, with my family. But Amazon, you see what's going on. They're all red. So the lower these five go, the more likely that Apple is going to break the 176. So just keep that in mind. That's the way I'm looking at it. So that's the way I'm looking at it. You see what's going on in Meta. Yeah, that's a big move. So Amazon, Microsoft, then you got to think that's going to break. You just got to say it's going to break just on that. I'm not touching the ES. I'm going over these. I'm touching Apple. So just keep that in mind. So bond stopped going up. Apple ES hit resistance. So I messed with the apples of the world. So and we're still short Federal Express. I don't know about that one. So that we're in the hope stage in there. So that's where we are right now. But you see what I see on the ES. So if I'm seeing all these stocks go down, you got to think, either you play the NASDAQ or the ES. But I'd like to see this trend line pop Paya. To me, that's pretty steep. I like more horizontal lines, like you're seeing in the NASDAQ. In fact, not here. It's not as good a one because the prior move is up. But yesterday in Apple, I called out the Brecher ledge, which is a consolidation pattern after a sell off. So there's your Brecher ledge. It was more right here, more a horizontal line here. And when it broke, it kept going. In fact, well, that's what I wanted to show you. In fact, now that's what I'm watching. Now you could take a 2-minute or a 1-minute. Because I have so many one. No, that is posted on the Chart Patterns Mastery that we got short Apple, just to let you know. And now this is what I'm going to be watching. I'm going to be watching if the NASDAQ futzes around right here. You got to ask Mirza about that. And Lorna, if there's, I think there is, Toro Joe. So, but if I watch this futz around in this area and these keep going down and this refuses to go up, then you do the if then. So if that breaks, you got to think that's going to finally break 176. At least that's the way it looks to me. So now we're in real time. I could be making a fool out of myself. And the problem is that if you go and you buy a put, that's equivalent to 100 shares, and you get a little nervous when the ES is still up. So you can always go and short smaller, 40 shares. It goes down a point, still a good percentage. So that's what we're going to be working on is these NASDAQ stocks today. Definitely, you see what's going on the right. All probability. The probability that it breaks goes up dramatically if all of these are going down. So just keep that in mind. So at least that's what I'm doing. And also, I can't impress it enough. You see all the reasons why I want to short Apple. All the rest of them are going down. Even Broadcom, the mighty Broadcom started to go down. There goes your Apple. So thank goodness I put it in there in the chart patterns mastery. I hope you saw it. So the lower these go, the probability is this goes and breaks that to the downside, and the NASDAQ breaks it to the downside. Both of them look very similar. So, Paya, did you see about ES? It worked. But I like that horizontal line more, and I like that these are all red. So, I really like that. Now, just to let you know, we've had an emotional roller coaster when it comes to Federal Express, and I'm still not sure which way it's going. Let me just put it this way. I like having 3 reasons to do something. You just saw this area that the only reason I'm messing with Apple is the rest of the group went down. I had a lot more reasons in Amazon with that trend line and Meta with that trend line. I'm not sure I have 3 reasons in here yet, but I want to show you on how you get hooked on something by not having 3 reasons. So the market got nailed. Like a lot of times, the market comes back the next day, but the thing that was the strongest goes down, which it's sort of going down. But I didn't have 3 reasons. So what happened? We were gagging on our spread earlier. So now, believe it or not, I still don't have 3 reasons. Now, if it breaks this rectangle for everybody that's in this and is mad, if it gets under there, it goes to the strike price. That's why I have an order there to sell as if it goes to the strike price. But it's got to get decisively under this. So it's got to get really under there. And then, just like with the other ones that have big strike price open interest, it has it at 260. But the verdict's still out. So just keep that in mind. That's the way I'm looking at it. So just to let you know, I do chart patterns mastery. I have on Sunday night, Tuesday night, and Thursday night. I put up. There goes the NASDAQ, by the way. And Paya, if you shorted the ES, good. There you go. So, but let me just show you what her objective was in Apple. But I did the preface that it doesn't go down in a straight line. There you go. Let me show you. There, I know that's an opinion. And like I said, it doesn't go straight down, but this to me is called a head and shoulders consolidation. So as you see, Apple's still holding like a champ. But after sell-off, that to me is a head and shoulders consolidation. So On a weekly, the 50 moving average, there you go. 165, like you said. So that would be the first stop. But like I said, it might not be straight down. But let me show you an example of another head and shoulders consolidation. Basically, you can say it's a diamond formation, and I just copied and pasted it. And like I said, I'm not sure about that. So, but there's what I'm looking at. Like I said, I'm not guaranteeing that one bit, but that's what I'm looking at. So let me show you an example yesterday, 2 days ago on Fed Day of a head and shoulders consolidation, which I posted as it happened. Got to find the Fed Day. Now, I'll see the pattern a mile away. There you go. Look at that head and shoulders consolidation. So it sold off. You don't anticipate. You wait for the break. That's it. So if you tried to short here, you get yourself hosed. So you wait for the break. And when it broke, that was only about 300 points. But another way to do it is just take the measuring objective like I just showed you in Apple. So from here to here. So that's conservative. That's only 87 points from the break. Now you might say, well, it went farther. That's usually if it breaks. I mean, they're inverse head and shoulders as well. If it breaks, a lot of times it overshoots. So if you want to see that, I'm just showing an example. Here's an example. Like I said, Apple. Now, keep in mind, one reason Apple's acting great today. The reason it's acting great, they have a massive buyback. So, definitely keep that in mind. So does Federal Express. So a lot of these have buybacks. Amazon doesn't. These do. Very curious to see Apple act so well when the others are doing that. So that's why we didn't buy a put. We shorted a portion of what we did in a put. So now comes, what do you do in Federal Express? What do you do? Do you take a profit? We have a butterfly basically that we bought at $1.04 that went to $1.40 that went to zero, and now it's probably 70 cents. I'm not sure. Now, one way to play it is just go buy a little stock against your position. So I really don't know yet. So that's where you have pressure. So right here we go again. This broke, this broke, this broke. This refuses to go lower. Yeah, you got to watch that 177.5. So we're short a teeny bit, not much. And as you see, of all the stocks here, it's the one acting the best. So definitely have the stop up here. Stop like up there. And if it looks bad again, we can always get back in. So I gave a share link up there. So it's a proprietary indicator, but it's up there, the share link. It's at 11:42. So here, let me share it again. Let me find it again. Yeah, and I just called it the Brecher ATR trailing stop colors. So here you go. There. Now, keep in mind that the reason I'm doing it is not because it's just, the end all, even though you see what happened with the rest of the group. So it's because I have so many charts up. So if I see like deer all of a sudden turn green, it's acted terrible all day. Still doesn't look good on well, that's a 1 minute. But I see like all the retail turn red, like half of them, then I'll play the other retail to the downside. I mean, that's the theory. Just to let you know, I mean, that's the theory. Like I said, ES going to test the lows. That's the theory. And the other thing, well, I'm not saying to do it, but I'm still watching Federal Express, but I need this probably down for it to go to 260. Just to let you know, and I'm really so if you're in it, I'm having to watch it like a hawk, just to let you know. And by the way, do not think for a second that we don't get nervous at this. I'm much more nervous about subscribers losing money or making money than I am me. So I'm definitely nervous about Federal Express. And I still don't have a read of how low it can go because of that. It's got to get under here. And so that's what I'm watching. In fact, all right, chart patterns mastery. I'm buying. There. I have to do it. Now I'm hoping I lose on what we just bought. So we just bought a fraction of stock against our position. Just a fraction. 261.50, by the way. Let me put that in there. A fraction. Because this could be a tractor beam now to 260. Remember, I told you I had an order in stubbornly. And in fact, let me show you. There. Like I said, stubbornly, but that's what I have in. Just so you know, heads up in there. Heads up. So when it comes to the most vulnerable, it all depends on the bonds. But I'll show you. And I'm not saying today, I'm talking about longer term. And I'll show you because this was also on the box charts last night. So these have been really working. So one of our theories was if the NASDAQ went down, the big NASDAQ stocks had to go to the 50 moving average. If the broad market was down, then all of these had to go to their 50. And these were also on the charts I share. So in answer to your question, which is a great question, where do I think markets are going to go? I think markets go, like you said, or someone said about the moving average, Look where the prior high tops are and the moving average. That's all about 4,200. So, Mac, let me share these. I'm not saying today we're getting oversold, but I'm just saying theoretically that's what I'm looking at. All right. How about the NASDAQ? You'll like this one. Now, I'm not using the the SPY. I mean, the ES, because there was a rollover gap where it goes from June to December and it's at a premium. Look at the NDX. Yeah, look at that. So now I know that looks ambitious, but everybody thought I was crazy about this, the NDX and all those approaching. So here you go. But that's what I'm watching. That doesn't mean today. In fact, on the way down, all these suckers, look at those sharp rallies. Everyone created and overbought on a weekly. But ultimately, that's where I think it goes. All right. And that's where I am. Now, let me just tell you, we would need an alert of if the ask is at or below 250.61, and then we know we're probably going to be right. There, I just have to post that for you because we have orders in. Like I said, Apple refuses to go lower. Just keep that in mind. And that brings me to another thing. Definitely. And that's if something breaks and everything else breaks and this refuses to go down, then it's relative strength. You probably have a real tight stop. And then if this rallies on the upper right and this refuses to go up, you can always get back in. It's free commission. So just keep that in mind that you could get whipped around, but it's free commission. All right, here you go. By the way, Mac, when I talk about a head and shoulders consolidation, like I showed in the NASDAQ, there's a big difference between Apple's and the NASDAQ on Wednesday. And let me show you why. So here's the NASDAQ on the right. And here's that head and shoulders consolidation I mentioned. Right there. The difference between that and Apple on the left, this is Apple on, let's say, a daily chart, is that Apple has layers of support on the way down. That's why I said it could be choppy. But this on the right didn't have anything on the way down. So now the reason I'm mentioning that, you might be like, I was talking about IWM, because IWM also has a head and shoulders consolidation. So after a previous move down, it formed that. So when you get a horizontal line like that, I like to call it a Brecher ledge, but it doesn't work as well if it's against a lot of support. So up here, heck yeah. You see there's no support until there. So you see how fast it went down. Now Well, there's your gap. So of 176.5. So that's your first stop. I mean, that's what it looks like to me. So, I mean, like I said, though, this is really straight down. You're going to have some twerks both ways. But ultimately, that, everybody talks about filling gaps. You don't have to fill a gap. The thing is, that's the path of least support or on the way up, least resistance. So in this case, least support. So at least that's how it looks to me. So as you see, the NASDAQ tried to break on the upper right and Apple wouldn't, which means you stop yourself here, which is what we did. So we shorted it here at 25. We got out at 76, 25 to 40. I mean, we're talking about 20 shares. I'm not sure yet. If I saw a beautiful bear flag, yeah, I'd trade bigger. You just didn't have that pattern in here. So just keep in mind, we do that all the time, especially when you see relative strength like you're seeing. Oh, great, Peter. I'm glad you're looking at that. About a long time ago, ATR trailing stop. Yeah, I've used it. You used it then in a 2-line MACD. So all we're doing when we use the MACD and the ATR trailing stop is we're trying to be on the correct trend of the market, which is what we've been doing. And then you combine that with overbought or oversold to try to time your entries, usually on like one time frame later or a number of them, which is another thing I want to show you in here. Multiple time frames. Oh, here's 6 grids. It doesn't have the color in it. But the key is, if I'm day trading, I do this one. There. So as you saw earlier, you got oversold while it's over something and overbought while it's under something. What's that mean to me? You just don't trade. But let me save this and then share it. That's a real handy thing when you're day trading. So if I'm trading, let's say for the week, I'll use these. If I'm trading for the day, I'll use these. So let me share this with you. And SM77, I said it. So I hope you're listening. So, but as you see in here, what's going on? This is where you don't, well, on Chart Patterns Mastery, SM77 asked if I'd use the word twerking, which I use a lot for when the market moves around, doesn't mean anything. So what's going on now? You have some overbought, some oversold, some over the ATR trailing stop, some aren't. So this is where we don't do a lot. So, that doesn't mean to leave. I'm watching every tick. If you saw me on screen, I'm at the edge of my seat. So just to let you know. So you saw the relative strength in Apple, no doubt. And you saw that. What else do you do in here? Well, the first thing you do I take a profit on the rest of TLT? So I sold half. Now I should have sold all. Now, why should I have sold all? Well, let's take TLT in here or the bond market. The only difference, TLT is 20-year. ZB is 30. TLT is non-24 hour. ZB is. So let's first take ZB and where the resistance is. Well, now you see why it stopped. Not because of the price, but it's just too overbought at the moment. Too overbought on the 15. Not that overbought here, but that's why I sold half. So am I going to try for the right here? That's a little piggish, but theoretically, now you see why I only sold half, because that's where it eventually could go. But that's why I sold half. So as you see, this green and red really helps, especially when you saw this try to break on the upper right and Apple wouldn't and went up. Then you got to figure the rest are probably going to try to follow. False breakdown and led by Apple. I mean, that's the way it looked to me. And that's what happened. And in answer to your question about shorting the ES, I didn't. I messed with Apple. We lost about 7 cents, 10 cents on tiny amount because you just didn't have enough reasons. So that's where we are. Do you mess with Meta on the short side because it looks so bad? No. I want to see Meta have this kind of bear flag or that one. So if I miss it, well, I miss it. How about a bull flag? It's against resistance. I don't trust a bull flag. So that's unfortunately where I am. Which means, well, I don't usually go to lunch, so I'm not going to lunch. But it just means it's a push at the moment everywhere. Like I said, Mac, that doesn't mean now. It doesn't mean that you have to be bearish, at all times. But when you saw this, not you, but I mean, when I saw this and I saw this hourly chart break this, that's when you short. So, I mean, that's what I'm telling you. It's not everything. You wait for your trigger. And that was a good trigger. NDX, good trigger. The more times a trend line can touch something, the more significant. I mean, that's the way I look at it. And in answer to your question, where do I think the NDX goes? Well, the first thing is it needs to get to here. That'd be great if it got to fill that gap. But that doesn't mean to short there. That means to then look for reversal patterns at that level, that around there. It's not an exact price. So that's what I'm trying to do. So at the moment, yeah, we're up in Federal Express. It was worthless. So that's why I bought 10 shares against my position. If it goes to 260, yeah, I'll lose $15, but I'll make 100 on the spread. So that's what I'm doing, which means I'm not in these at all right now. So now I will tell you another thing about relative weakness and strength. If you see bull flags and they start failing, then other bull flags are more likely to fail. Just keep that in mind. That's just something to stay with you. Yesterday, some of them failed and then the others failed. So little trader tricks. So other thing, and it might not be today, but unless these bonds are up a boatload, like up 30, I still think this is going to go and test the lows from yesterday down here, or at least there. But really, it's even farther down. So just there are a lot of people hooked, and there isn't that much bearishness that you think there should be. There just aren't. I'm looking at your AMD. Yeah, there you go. There's a beautiful break. You're talking about that one, right? This is on the YouTube channel. There you go. Under the ATR trailing stop, an hourly break. So I think that's the one. You're talking about 10-minute? Yeah, it worked on there, or 15-minute way back here. There you go. Yeah, that was a good one. Now, you might say, well, wasn't this a Brecher ledge where you get that horizontal consolidation? This one looks like that until you realize the previous move was up, not down. That one wasn't as clear cut. This one was. So, yeah, I mean, I totally see what you're talking about, no doubt. So, great questions. Let me get going. I hope you found this helpful and have a great weekend. I'll talk to you on Monday.